Come to where the flavor is. Come to Marlboro country.
Altria Group, ticker symbol MO, is a leading tobacco and nicotine company best known for its ownership of Marlboro, the top-selling cigarette brand in the U.S. Beyond traditional cigarettes, Altria has invested in smokeless tobacco, like Copenhagen and Skoal, e-vapor products, and holds a significant stake in Anheuser-Busch InBev. The company has also attempted to expand into cannabis and alternative nicotine products, including its investment in Juul, which faced regulatory challenges. Altria is widely known as a high-yield dividend stock, attracting income investors despite long-term concerns over declining cigarette sales and increasing government regulations. Altria is a dividend machine. Altria offers a high dividend yield, around 8% a year, making it a favorite among income investors. They have declining cigarette sales, so it's no secret that traditional tobacco sales are shrinking, but Altria maintains pricing power to offset volume declines. Regulatory risks. The FDA crackdown on nicotine levels in flavored products could impact future growth. Smokeless and vape strategy. Altria is expanding into on-nicotine pouches and e-vapor products, but faces stiff competition. Altria Group currently trades for $52.58 a share. The stock is up 29.51% over the past year, and the market cap is $89.11 billion. The price-to-earnings ratio is 8.04, and the annual dividend yield for the stock is 7.76%. It has a 52-week low of $39.25 and a 52-week high of $58.04. 7 analysts with 12-month price forecasts for Altria Group stock have an average target of $53.29 with a low estimate of 41 and a high estimate of 65. The average price target predicts an increase of 1.35% from the current stock price of $52.58. So analysts are pretty split on the stock, and it really does make sense because from a DCF value standpoint, it seems like the stock is really undervalued, but in reality, this stock faces extreme scrutiny from the government. They're involved in a lot of different industries that are very difficult to operate in. The stock also hasn't had really good growth of revenue. And, that's part of why I sold this stock, because you're also facing some opportunity loss where if you're invested into Altria, you're getting the big dividend. And if that's your goal as an investor, that's great. And I think that this should be a legitimate thing that you should give a look at, although I don't think that the cash flow is necessarily completely secure. And just because a company's giving me a dividend, that tells me that they don't know what to do with that money and that there's no way for them to put that money back into the business and make me more money, which I don't always like, right? But I do like it in this case because if management legitimately cannot find a way to expand the amount of, money that's going in and invest in some kind of capex, then I think that that's legitimate to give it back to the investors because that's increasing shareholder value as much as possible. However, for me, I look at a company like Altria and it pales in comparison to a company like Meta or Amazon or, Waste Management or something like that that doesn't face the same kind of scrutiny and doesn't give me the same kind of headaches. Here is my weighted average cost of capital for Altria. I took the cost of debt after tax and the cost of equity and then multiplied them by their respective weightings to get an average cost of capital of 5.56%. Moving over to the actual model, you can see that Altria looks, super bullish, right? Now, the reason I think personally that you should not buy Altria and that Altria is actually a hold, and I did own Altria and made some money off of it, but the reason I think it's a hold is because it's actually the opposite of what you have to do with a lot of stocks like Microsoft, Apple, the really high quality like Mag 7 stocks you always hear about. You kind of have to do the opposite. So those stocks will sometimes trade at a premium, and it's still sometimes a good time to get in because the business is just so good. Altria is actually the opposite. It's trading at a discount compared to what the fair value says at a negative 1% growth rate and that discount rate that I just showed you of 5.56% because the stock has a lot of regulatory issues that I talked about before and revenue is actually shrinking. Now, free cash flow is growing by 1.27% on average, but that's because they've been able to lower their costs, right? The revenue has actually been shrinking, which is not good for a company that you want to own for the long term, right? So Altria has a great dividend. It's pretty stable. You can see up here on the revenue that the revenue is pretty much the same the whole way through. From year to year, it doesn't really change very much. It's obviously a consumer that's literally addicted to the product, so they're coming back and consistently buying the same amount, but they're having trouble getting new consumers. And as the older generation starts to die out, they're really going to need to rely on to be able to get the younger generation hooked on nicotine, right? And I don't know. I mean, from a moral standpoint, you can argue that you don't want to be involved in this stock, right? And I completely understand that too, because there's literally 500 companies in the S&P that you can buy. There are 499 other ones that you can look at, right, and get a reasonable dividend out of. So, but that aside, right, if you don't have any moral problems owning Altria Group, I still think that you shouldn't touch this because the quality level of this stock is just so low and so abysmal that even if it looks like a good buy, I would just steer clear, because for the long term, you're not going to have as much success as you are from the compounding growth of owning like an Amazon or a Meta or a Microsoft or an Apple or something like that, right? And I actually ran into this mistake pretty early on. I saw big dividend yield equals I should buy this company, right? And even now, it looks attractive to me. Like I'm tempted to buy this stock, but I think you have to hold out. And I think that the actual business that you're involved in matters a lot more than the valuation, personally. I would much rather own a very strong business that I know is going to make up that growth in the long term. And maybe, I buy at 10% over what the company's actually worth, but then a year later I'm up more than the company that's 10% undervalued because it can't grow. And that's kind of the situation I think Altria Group is in. And there's so many things that are just risky. I mean, forget about all the headlines that we live in, right? I mean, it could take just the wrong person not liking the product or choosing to use it as a political tool, or just the wrong thing happening, and Altria can just dive down, the side of the earth, basically. Like, this stock can just free fall given the wrong conditions. And I think that's why it trades at a discount, because those things are, baked into it. I mean, there's just so much risk with this stock. A lot of YouTubers, rant and rave about it, say this stock is so amazing. Analysts do too. They're really hyped on it. They think it's amazing, but they really fail to include that the business is not good, right? And fundamentally, when I own a stock, I think of it as owning, because it literally is owning a piece of a company. And I would much rather own a piece of a very successful growing company that has a lot of, upside surprises versus a company that has a lot of downside negatives surprises, right? Because there are a million things that could happen that could drop this stock. I mean, they could have worse than expected earnings. There could be new regulations. There could be higher taxes. There could be a number of things, because for some reason, I don't know why it is. I mean, I do know why it is, because tobacco and nicotine will literally kill you if you do it long enough, and can lead to horrible cancers. So the government isn't too excited about this company, and the optics are not good on it. So I personally do not think you guys should buy. Let me know what you guys think in the comment section down below. I realize that the dividends are really good, and it looks really attractive on paper. Obviously, 23.9% upside, even with a negative 1% growth rate of the free cash flows. But again, I would just recommend nobody touch this. And that's not financial advice. Obviously, you can do whatever you want, do your own research, and, create your own thesis. I'm not a financial advisor. But if you like the video, please hit the subscribe button. I've got plenty of stock analysis videos, and I also have videos about my personal portfolio, so check those out too if you're interested. Bye.